Hi, everyone. I'm Rick Bensignor. Today is Tuesday, October 18th. Welcome to this week's In the Know Trader Show. We've got the S&P up about 50 points or so this morning as we record. The Dow is up 420 or so. 10-year yields 3.99. Let's call them about 4%. And crude oil down $3, natural gas down 15 cents. Bitcoin is down $90. The dollar has reversed from being lower. It is now up 19 pips, and gold is down $8.50 at $16.55 on COMEX. We're going to do something a little different today than we typically do, because as we go through the show, normally we do a whole educational portion and then we'll focus on a sector. I think with the transition that we're potentially seeing here from what has been a bearish market to at least a near-term bullish move, I want to put the entire show and just focus on a whole bunch of names that you could easily be involved in. So let's spend today looking at the 30 names that make up the Dow Jones Industrial Average. So we'll go name by name, and that will be what we do in today's show. So you've got the 30 holdings that make up the Dow here. What I am going to do is go through them in actual the weighting to the Dow. Remember that the Dow is a cap-weighted index. Is a price-weighted index, not a cap-weighted like the S&P. So the higher the price of a stock, the more influence it actually has in the price of the Dow. And it's kind of a weird way of thinking of things, but that's how they do it in the actual compilation of the Dow. But we'll just look at them. So this may be a different order of the names than you're accustomed to seeing, but we're doing it based upon the weighting. Essentially, the highest price names are at the top of the list and the lowest price names are at the bottom. So Intel is, the 30th name because it's the lowest price stock here. To sign up for our weekly tactical trader report that comes out usually on Thursday nights, go to intheknowtrader.com. This will give you a full view of everything going on across the major asset classes that exist. So we go through the bond market. We often look at credit spreads. We'll look at the dollar and how it's affecting other markets, and it certainly is quite a bit these days. We'll look at often gold and oil to get a sense of what they are doing, and we'll do a deep dive into the S&P. That report is the only report that I put out where you will get my view on what goes on to the S&P. I don't talk about them in this weekly type of webinar. These are generally educational, and my views on the market as a whole through the S&P, which is the most important index as far as I'm concerned, is reserved for clients of In the Know Trader. We also put out a monthly report, and this report is called the 7-Eleven report. It is geared and set up for anybody who's looking to outperform the S&P 500. So it's benchmarked against it. And what I do is I pick no more than 7 of the 11 Spider Macro ETFs to invest in any given month with the goal of avoiding the underperforming names. And to give you a sense of how we've done this year through September 30th, the last time once a month we update this, we are outperforming the S&P by 4.08%. We've outperformed 8 of 9 months this year. That puts us in the top of all money managers out there. And again, we're not a money manager. I'm not taking your money. I'm not investing in it. I'm simply telling you in a report each month where to be in those 11 sectors, and that would put us in, the top of all who benchmark against the S&P. And even more especially when you look at our entire 26-month history since we started doing this, we are outperforming by 888 basis points in just over 2 years. So if you're in Spiders, if you're in VOO, which is Vanguard's S&P 500 index, I highly recommend you take a look into this. You're entitled to a free 7-day trial and access to the most recent report if you sign up. And this is, you get a one-time free trial, but you can check out this report. And if your money manager that you've got money with, if you're down this year, what the S&P is down or more than what the S&P is down, I highly recommend you take a look into this report, because we are beating the S&P by over 4%. So it does mean that we're up on the year. We're just not down nearly as much as the S&P. And to tell you how difficult that is, historically, you know that 6 out of 7 portfolio managers cannot outperform the market over time. And not only did we outperform consistently in the bull market that was through 2020 and 2021, but we've outperformed this entire year on the way that the market's been going down. And now even that we've got some, a bounce recently. We're involved. We have a pretty good barbell approach that we've shifted into over the last month or two. So we do have exposure to technology. We do have exposure to consumer discretionary. I'm not going to go through all of them, but so we have defensive sectors on, but we've also switched to offensive sectors. So anyway, take a look into that. As far as my YouTube channel, we have the In the Know Trader YouTube channel. You should certainly subscribe to it so that anytime you go into YouTube, the most recent videos will be right on top. Go to youtube.com/InTheKnowTrader and hit the subscribe button on any of the videos that are presented in front of you from In the Know Trader. And lastly, follow me on Twitter, and my handle is @InTheKnowTrader. I want to remind you that a week from, or I guess we could say 2 weeks from yesterday, it will be Monday, October 31st. And I am speaking at the Orlando Money Show, and I will be talking and doing a presentation on the proper use of cloud charts. This is going to be the last time I do any type public presentation on cloud charts going forward. So if you're interested, if you're in the Orlando area, or if you can get there, there is here a discount link to register for the Money Show. So follow this link here that we've got highlighted in bright pink, and that'll get you in for access to the entire show at a greatly reduced price. Here are the 30 names that we're going to take a look at today. And I wanted to show you here that because the Dow is price weighted, the higher price stocks, and you can see here on the right-hand column, is United Health Group is trading at, let's say, $525 a share. Therefore, it gets the most weight in the Dow. And you can see all the way down to Intel, the lowest price stock at $26 is only 0.5% of the weighting. So you'd think 30 names would each, if it was equal weighted, they each be 3.33%. They're not. So if you're going to trade the Dow as an index, let's say diamonds, DIA, you should know which names really have the most weight here. And obviously it's the higher price names. So as I said, we're going to dedicate the entire show to these 30 names, given the potential transition we're in and whether or not any of these names or how many of them are going to end up being the right time and place to be a buyer. So let's switch over to our charts now. This is the diamonds itself. So here's the Dow through its mainly traded ETF. And a few things of general note. One, the downtrend channel that has existed for the bulk of the year is still approximately in place. We had one major move through it in June, and then of course the turnaround right back to the top of the channel that slightly exceeded it, closed within its parameters for that particular week, and then headed down. And again, we closed beneath it, and now we've come back up. And certainly it would not be crazy to think that we could get back up over, let's say, 32,000 in the Dow, 320 in the diamonds. And so right now we've got a short-term downtrend line that we've slightly exceeded. This is a weekly chart, so the week's not over. So we don't know if we're going to, if this has broken yet. And if I look at the most recent uptrend line that we had broken through, we certainly could backfill against that. And again, get back towards the top end of the range. You have the declining 50-week moving average. So obviously we got just beneath the 200-week. We've come right back up. This deep blue line here is the 200-week moving average. The bright red one is the 50-week. We also, on the June low, stopped precisely at the 38% retracement from all-time highs down to the COVID low. That's, of course, a major Fibonacci number. The horizontal red line would be a 50% retracement. So this also faked out a lot of people saying, oh, well, we broke through the 38%. We should be going in the 50, only to just right now turn around. MACD has a chance here to put in a double bottom. It hasn't crossed higher yet, but you can see that we've basically stopped and we're starting to curl up pretty much at the same level as the last time down. So lower low in price. We haven't made a lower low in the MACD, potentially bullish divergence here. So a case that certainly you can do some buying on this rally, and it could certainly fade. And I'm not saying you have to necessarily chase it right here, right now. But given the bounce that we saw off of the last week's lows, which were new lows for the year in the Dow, and you can see that here, this has made a lower low. We've obviously come significantly storming back, but it's going to have places that it's going to pause. The Dow right now being up 420. I'm just trying to look at, let's see what the high was. So 38, it's about 200 points off its high already. So, we're seeing some profit taking already today coming in. All right, let's take a look at these 30 names, see what we've got, which ones look good, which ones don't look good. Here's UNH, again, the highest price name, the most weighted, so the most important name in all the Dow because it influences the calculation the most. And what we see here is a steady uptrend line that goes all the way back to first quarter of 2021. This pullback into June ended up being a setup 9 low. Right into the top of its cloud against prior support from the TDST line. So this area is still held. We came back, tested the highs, backed off to the cloud and the trend line again last week, and are bouncing again. So if we can get through the highs, then we've got targets that could be as high as, let's say, 575-ish up to 590-ish. So that's good. What would be unfavorable is breaking the trend line, in which case you open the door more for a move that could come and test the bottom of the cloud at 468 or so. So those are the parameters. But looking at this in general, certainly a strong name above its cloud, held its trend line. It's done everything right so far. Goldman Sachs is going to be a different looking chart. Notice that price action has been underneath its cloud. So technically, UNH, of course, a different part of the market. UNH is in healthcare and Goldman Sachs is in financials. But just from a pure technical perspective, a very different looking chart. Price action broke through its cloud, the lagging line twice, got minor breaks to its clouds. It's come back. There is going to be some resistance right into kind of where we're trading now. Secondarily, against the same highs that we made in August. So let's call that 350-ish, between 350 and 355 or so. And if it gets through there, and you got a more significant rally, you could get as high as the 390s. On the downside, new lows for this year would be quite unhealthy and open the door for a much more substantial pullback. Home Depot, name weighting number 3. So we've got standard sequential here. We got down to a 12 count. For those of you who know this model, this is part of the core way we look at things. You know that 13s are often at least a time to reconsider playing what the current trend was to potentially lock in profits, or at least not initiate new positions. If I turn this to an aggressive sequential, I'm going to guess here that, yeah, we did get the 13 count. So when you look at this, you can make the case that you've got a double bottom in Goldman. It's not really far away as I look back in price, not really. In fact, it's almost precisely where a whole bunch of lows were over the last couple of years. So there is some sense of real support down here, somewhere in and around, what, 265 or something like that. Yep. So you can see same thing, the August rally failed right against the bullish propulsion level here at 334.5. That would still be some significant resistance up to about 350 or so over the next several months. You don't want to see, let's see, new lows gets this one's kind of tough because new lows would not be particularly good, but at the same time, new lows would create a potential 13 count into some support from 250, let's call it 245 to 255. Tough call. Amgen. When I pull this up and I look at the cloud chart right away, it can tell me the cloud chart's not going to be terribly helpful just because of how many times it crossed and the fact that I see a sideways market. And like anything that kind of has a lagging indicator that uses, in theory, some form of a moving average, it's not going to be terribly helpful. So I'm just going to take it out and see that basically we have this significant trading range. So let's call it somewhere from roughly up in here to, we'll call the lows somewhere around there. Obviously, we exceeded them a bit, but this is right now, Amgen is just in pure trading range. You've got to make new highs that sustain themselves as highs to then target something up at, let's say, 283. That would be the breakout bigger target. Otherwise, look, a new high doesn't mean we're going to scoot up. You got to have a new high that holds the high. If it does, then I can more confidently tell you that it's going to get north or at least challenge that 283 level. And right now we've got some support just nearer term. I'll show you here. The springtime low got tested in September, October, so that's at least holding. So look, long term, if I put up a 200-week moving average, you're going to see it still has positive slope from lower levels over time. So you know this is kind of a long-term hold, but you can expect some decent range to it. But this is all sideways action, and generally is holding where it needs to. So if I'm long this name, I hold it. Would I first buy it now? I would not. I'd rather buy some type of pullback than go chase after it right here. McDonald's. Got the aggressive 13 buy signal a month ago that stopped the decline right then and there. Let me just put up the cloud. I'm not sure this is, let's see. No, it is helpful. So price action has stayed above the cloud, just recently broke it, but the lagging line has not broken through its cloud. That's significant and would argue for that this is still decent, but you can see here we've got a double top against this year's highs, and we've got multiple lows here going back in time. There's support. So trading range, you're right in the middle of the trading range. In fact, you're literally 50% of the distance between this high and these lows here. So you're square in the middle, no particular vig or advantage to buying the name right here, right now. Microsoft, multiple 13s, both sequential and aggressive sequential over the last 2 to 3 weeks. You would look for a bounce here. Now this has broken beneath its cloud. The lagging line has broken beneath its cloud. That's not particularly good structurally, but we held above the 200-week moving average, and we certainly can get some move up to, let's call this 250 to 256 or so, 257 over the near term. It would need to prove itself beyond that to then target 263, and then let's call that 288 or so. Also, you should, I'm not going to take the time to draw the downtrend line from all-time highs, but kind of pay attention to where that is too. My goal here is to get through all 30 names as quickly as I can. Next is Visa. Also one of the weaker names where price is beneath the cloud, the lagging line is beneath its cloud. Obviously, we've broken through the 200-week moving average. It does have a 9 setup count here, which is its first one of the whole move. So that at least gives us a chance that we don't want to be sellers any long. We can play for some type of tactical rally. Look for a test back up towards the 200-week. In fact, anything between 192 and about 204 is going to be your initial resistance on this bounce from here. In the bigger picture, tough to call. This really needs to prove itself over the 220 level over time to eliminate any of the bearishness that we've seen since this peaked in the summer of 2021. So still a name that has a fair amount of technical resistance, but I'm not, it's kind of late to be a seller at this point. Caterpillar. I like the way, so we've got, a test and a mild breach of the 200-week, but held against these other targets and the risk level from that 13, or at least above the conversion line right now. If we stay above that into Friday's close, I would then look for a test of the baseline up to about 200. Not a bad name, but certainly the ones that have that price action has held the clouds are going to be technically stronger than something like this. Honeywell. Some similar picture to, let's say, what Caterpillar looked like. This is broken beneath its 200-day. It's coming back to test it. There is going to be some resistance there. If it gets through there, look for a test back up towards 200. Again, make sure you draw your downtrend lines from all of the all-time highs on these to make sure you know where those come in. But this has held, if we look at kind of where before COVID hit, this reddish line in here, and I'll just extend it with kind of a purple, wrong way, with a purple line. This is the level of which the all-time highs were just before COVID hit. So we've come back and played with them. We've even dipped a little beneath it. Other ones have held above, the S&P has held above, et cetera, where those pre-COVID highs were. So this is a little technically weaker and should have resistance because of the cloud overhead from it. So again, this really has to prove itself above, what do we say, 205? Yeah, 205, 206 to really kind of be out of trouble. Otherwise, this is somewhat a sell on rally candidate. And if we got up into that cloud zone, I'd probably be reducing my position. J&J broke through its cloud, lagging line still holding above. Not a bad name, still mostly kind of sideways action. There's a slight, if you look in the bigger picture here, actually, I'll take the cloud away for a second, just makes it easier to see that since we made these all-time highs and pulled back, we made higher highs. We did not make lower lows than these lows. So this is still in a long-term uptrend, but it's very slow. You look at the 200-week moving average, there's not a lot of, it's positively sloped, but it's certainly not sharply angled higher. This is like many of these drug and pharmaceutical type names, long-term make their way higher over time. And these are names you kind of generally look to hold for years. They're not generally quick money type names. Travelers. So double bottom against the bottom of the cloud, the first one with a 9 count. This one holds the same TDST level going back to late December. You're going to find some resistance up in here. So here's a name that, you know, we're starting to get into some important resistance, anywhere from current price up to the low 170s. Is a place to potentially take some profits. If it gets through that, then we're talking about targeting the upper 170s. So, you know, long-term hold, didn't do any real technical damage. Held the lows. You can see there's important support going all the way back to March of 2021. We held above there, and so long-term hold, medium term, you know, you could potentially reduce if you're concerned about still another leg coming to the downside, which is certainly not out of the question for next year. Chevron held above its cloud, came to it just a few weeks ago, bounced on it again, needs to properly break above 165-ish or so. If it does that, then it can attack the all-time highs. But it does need to prove itself. You can see we've stopped multiple times over the last 4 or 5 months up against the same level, and it needs to get above 165.25, especially if it were to happen after a week that had a down close the prior week. That'll increase the odds that you can get a breakout to the upside. Salesforce, well, this is interesting given some news on it today, but take a look here. That price is kind of playing with where these lows were from May. You're going to have some cloud type of resistance, but again, given the news of interest in a private equity firm taking a large stake here, that's certainly going to help things. But look, you still have resistance, and until you get above 165 or so, this is still somewhat heavy. You can make the case to bottom fish, certainly because of the 13 counts, but this has a fair amount of technical resistance to deal with. And if we take a look at a trend line, this one's going to be fairly sharply sloped. So you can see right, that trend line is also right where the baseline is going to be. So this tough call here. You could still get a couple weeks of back and forth on this before it makes its true move. Apple, usually at the top of the list, but because of its price, it's not, in the sense of how it's weighted in the Dow. I'd say it's probably important how this week ends. If the lagging line gets back above let's see, where's this level? No, I'm trying to get, there's 2 lines in the same place, so hold on a second here. Now we can figure it out. If the lagging line closes back above its cloud this week, so 143.76, oh, what do we have here? Unrelated to that, 146 and change. So this needs to get above 146 to kind of get a sense that you've got a double bottom here in place. But it's going to have resistance both from its downtrend line as well as, you know, it's got its cloud to deal with. So it's I'm kind of neutral on this. But from a tactical point of view, I kind of look for where this closes this week, and it needs to really get higher than 146 and change to make me think that we can still get some type of bounce here. But I'm not convinced this is necessarily just going straight up the way some other people are. American Express, kind of like how the lagging line's holding against the bottom of the cloud here, and the 200-week moving average. We got to a 12 of a 13, a little resistance where we are now. Tough name, but still structurally holding in here. Same thing, if we make new lows, we're going to get a 13 at the same time you make new lows. That's a tough call, so I have to be I'd be I don't know, neutral. I'm not sure I can come up with better than that. Boeing. Here's a major industrial name that's already rallied into a 9 up. So this bottomed into the May-June bottom, rallied 9 weeks in a row, closed above the close from 4 Fridays prior, sold off, tested low, all back into this same kind of support level that we saw after COVID. So it's holding on to important support. And if you look at where it kind of broke down from, so let's put it into this type area. There we go. Let's call that the high 180s. You're going to have some resistance there. So right now, this is just range trading, but at least we have what appears to be a decent low in place. Walmart. Good chart. 9 count on the bottom, made its way back to the cloud, held the 200 week on the most recent rally. So you had the bad earnings report. The cloud has gotten very narrow here, so it's not going to be a big clue to what's going on. Again, when I kind of look at this in a bigger picture, my eyes can see that we have some sense of that being the trading range. Let's take the cloud away, and oops, that shouldn't have happened. The rectangle disappeared. But again, here, this is your general trading range, and right now you're smack in the middle of it. So I give it some credit that at least recently it's held its 200, but when you look at there is some resistance in, let's say, let's see, somewhere around here. So no particular edge in playing this. It can go either way. Procter & Gamble. Another major consumer name. Now this is interesting. Got a 13 this week, or I'm sorry, last week. We're bouncing from it. We're back to the 200 week. If we can get back above there, then look for initial resistance around, where is that? 134 to 136 or so will be your initial resistance on it. But this is a potential bottom here that is. I could make a play for. IBM set up 9 count. That's still holding as 9 count. Some of the other indexes, because of just how much we've rallied this week, they've already disappeared. This is basically holding. So look at prior support. That's your general range. You're near the lower part of the range. You can make a case for this one too, just in range trading and the fact that you've got a 9 count. JP Morgan came out with good earnings to start off earnings seasons here. Some resistance from the baseline, secondary resistance at the 200 week, and certainly its cloud being above it will present some problems in the future. So if we look at the downtrend line from all-time highs, where that comes in, well, that's well above the cloud right now. I don't have, from like DeMarc's timing models, there's nothing here, most especially probably because this week's strength would have killed the 9 count. But you're going to see some sellers come in here. So not convinced that this is necessarily going higher first. But and given how much we've moved up, which is almost 20% off the lows into this week's high from last week's low, you've got, if you buy this name, you got a risk to a new low. And that's, I can't tell you that I'm generally ever looking at putting on a name that I've got a risk almost 20% to put on. So for now, I rather, if I'm going to buy it, I have to buy a pullback. Here is 3M, all right, major industrial name, took out the COVID low, but we're right back above it. Now, we're not above it by much, and we're going to have some resistance initially from the conversion and baselines here. Nothing count-wise also, but let's see, 1, 2, 3, 4. Yeah, it's also the 9 count got killed because of how strong this week is so far. S&P is now only up 26, so it's given up substantial gains. Wouldn't surprise me if we get unchanged on the day today. which is partly why I didn't want to chase after things. But we can start looking at some of these names as potential buys, especially for kind of longer term. Disney. All right, so trying to put in a double bottom. Doesn't have the counts yet on the test, right? So we're up to a 12 and a 7. Over the next few weeks of some weakness, we could see both 9s and 13s come in and help out here. You've got to get above this baseline. Notice the rally stalled against the baseline. So let's take a look. That's at 108.36 this week. Next week, it's probably lower. So watch that for any signs of potentially getting through there to come back and then test what these highs were, because at that point also you're probably running into resistance from the cloud. Merck, one of the stronger names here, like a lot of the pharma names, long-term type holds. Now this is interesting. This is on a 13 sale from last week, suggesting that it's getting closer to exhaustion. Let me just take a quick look here. All right, so the all-time high was made in June. We're getting some signs of exhaustion that say this could get as high as 101. Near 101, I probably reduce some of my holdings on it, but this is a name, like many pharma names, that you just hold over time, and when it gets some technical damage in there, but it's not horrific. In fact, let's just look at this on a monthly. All right, so the monthly cloud bottom here in 2017, 2018, all the lows in the last year to year and a half, where we're into the cloud, does have a 13. So here the important numbers are here at 98.78, and then potentially all the way up at 108. But you can't argue with the fact that this is moving up nicely and near its all-time highs, playing with its all-time highs right now, where obviously most other names are not. Nike. Should we, let's do it, just do it? Well, do you buy this here? You have a 9 count that's imperfect because 6 and 7 made the lows, not 8 or 9. Makes it tougher to be convinced that it's going to sustain its rally. If you're a big fan and you're convinced the market is making its low, then this is a name you can consider. But you're going to have to be willing to risk a potential new 2022 low and still hold it. And you're going to have to hold it against the COVID lows, essentially. So if it's all about if you want to take the risk. The week after we made the bottom in 2020 on the COVID low, you see that monstrous up move, and that's where we've kind of come back and played into that whole reversal week. So you can make a case for this. I probably think more about maybe if you know how to use options, selling downside puts to get into a position as compared to just outright buying the name itself. Coca-Cola. Similar kind of 9 count, except this one has a perfected 9. The 8 count, the bar 8 was the low of the move, so that's fine. Getting some support, lagging line against top of the cloud above its 200 week. You could play for a rally, but I wouldn't expect it to get much above where this horizontal purple line is and or the bottom of the cloud here at, where is that, 59 and high change, 59.74. So it's kind of got a wall above it going forward, but certainly a name that you could get some bounce from at this point. Dow Chemical, or what used to be Dow Chemical, now called Dow Inc., not a particularly good chart, and no other than maybe a Fibonacci retracement or something here. We can do a quick look against from the COVID low to the high we saw in April. Oh, so we've even gone more than 50% down. We didn't get to the 62%. I mean, you're into some theoretical support area, but this is not a strong buy, and I don't like the way this chart looks in particular. So yes, you could get a trading bounce, but not a great looking name as far as I'm concerned. Cisco. Aggressive 13 on the bottom, spiked down last week to come back the other way. Now you can see we've already sold off from this week's high. But one could think of starting to get into this. You can see there's certainly support from the COVID low beneath, then the test back in October, November of 2020 came down there. I mean, this is big range, and for longer term players, you consider putting some small exposure on, but definitely not a great name. Verizon, horrible name. These cell companies, I mean, AT&T, Verizon have been atrocious. Let's look at a monthly chart because even the weekly is no good. Just looking if there's anything. Yes, okay. So the TDST line going back to 2011 is at 35.32. This month's low 35.04. So we have held against that for now. But you look at this name, yes, certainly it could rally from 37 into the low 40s. I wouldn't expect a heck of a lot. There's a lot of trapped people in this name. Look, you go back to 2012 or so, anybody who's been a buyer in the last 10 years is underwater. That puts significant overhead resistance in this name. And other than a trading bounce, it's not a name to own. Walgreen, Boots, really poor chart here too. Here's your monthly chart. Now you do have a chance for a double bottom. We're not far from some prior old support, but kind of ugly type chart. Now you can go back all the way to 1999 and take a look at where those lows were, and that's where the lows were in 2008, 2009. If you come down into the low 20s, so right now you're at 33-ish. If you come down another under or into that whole 25 area, you can make the case that there's some technical support. A bounce here gets you to play with the cloud. You'd have to get above 60 to even say that you're done with the real problem. But I actually think that, this is a heavy name that longer term players could do some buying in. But ugly chart, and what you have going for you is that you're closer to the bottom of a 20-year range. And the last name of the Dow 30 is Intel. So the cheapest looking name from a stock point of view, again, a $25 stock, nothing is that cheap. The trend line off of the 2000, let's call it the great financial crisis lows, that's long broken. A month ago, when was that? What did we, that's a monthly chart. Yeah, so we're looking, months ago that broke. There is some support, what we'll call this at 22.5-ish. Stocks now 25.65, so it's still 15% or 12% from there. Do I really want to do bottom fishing down here? I'm not sure there's much. I mean, it's again, you're buying this off a big range. Given that the 13 here on the highs and the big sell-off, we've got no exhaustion point. It would still suggest a few months before, maybe at the end of the year, I consider this name if it's lower. But right here, right now, no big reason to do it. So that's the show for this week. Next week, we'll be back with the educational portion again, but I thought given everything going on in the market, it paid to dedicate the whole show to just looking at these very popularly owned names that comprise the Dow 30. So that's it. Hope you have a good week. I'm Rick Bensignor, and this has been In the Know Trader.